Imagine waking up one morning to find your bank account drained. Not because you were reckless, but because you did nothing. Inflation has silently eaten away at your hard-earned cash, making it weaker by the day. Meanwhile, the rich? They're growing their wealth effortlessly. Why? Because they invest. Now you're here because you know investing is the key. But the big question is, should you invest in stocks or mutual funds? Pick wrong, and you might be left watching others build wealth while you struggle to catch up. Pick right, and you could be on the path to financial freedom much sooner than you think. Stay with me till the end, because we're not just comparing the two. We're revealing the strategy that the smartest investors use to get the best of both worlds. Let's get started. Picture this. You work a 9 to 5, you save diligently, but at the end of the year, you barely feel wealthier. Sound familiar? That's because keeping your money in a savings account is like running on a treadmill. You're moving, but you're not getting anywhere. And yet, when it comes to investing, most people freeze. What if I lose money? What if I invest in the wrong thing? These fears are valid, but let me ask you something. Have you ever heard someone say, "I regret investing early and growing my wealth"? No? That's because it doesn't happen. The biggest risk isn't investing in the wrong thing. It's not investing at all. Now, let's take a step back and address a major misconception. People often think investing is for the wealthy. That's a myth. Investing is how you become wealthy. You don't need thousands of dollars to start. Even $100 invested wisely today could be worth thousands in the future. The key is to start. But what should you start with? Stocks or mutual funds? Let's break it down. Welcome to the ultimate financial showdown. Mutual funds versus stocks. In this corner, we have mutual funds, the reliable, low-maintenance investment option managed by professionals so you don't have to lift a finger. And in the opposite corner, stocks, the high-risk, high-reward player that can make millionaires out of those who play the game right. Round 1. Control stocks give you complete control. You decide which company to invest in, when to buy, when to sell. It's your battlefield. Mutual funds, it's like having a financial coach. Someone else makes the decisions for you, choosing a mix of stocks and bonds to balance risk. Question: do you want control over your investments, or do you prefer a hands-off approach? Round 2. Risk and reward stocks. Huge potential for gains, but equally huge potential for loss. Think of Tesla in 2020. Massive growth. But also think of companies that went bankrupt overnight. Mutual funds. Lower risk because they spread your investment across multiple companies. You won't get rich overnight, but you also won't go broke overnight. Analogy. If stocks are a roller coaster, mutual funds are the Ferris wheel. Steady, predictable, and still gets you high. Round 3. Time and effort stocks require research, market analysis, and emotional control. Can you handle the stress of seeing your investment drop 20% in a day? Mutual funds, set it and forget it. Fund managers handle the tough decisions while you focus on earning more money. But what if I told you there's a way to combine the best of both worlds? Here's the secret smart investors use. They don't choose one or the other. They use both. The 80-20 strategy. If you're just starting, put 80% in mutual funds for stability and 20% in stocks for high-growth opportunities. The 50-50 strategy. If you can stomach some risk, split evenly between stocks and mutual funds. The 20-80 strategy. If you want full control and higher returns, allocate more to individual stocks while keeping some safety net in mutual funds. Now, let's get practical. How do you actually start investing today? Step 1. Open a brokerage account. Choose a platform like Fidelity, Vanguard, or Robinhood. Look for one with low fees and user-friendly features. Step 2. Set your investment goals. Are you investing for retirement, a house, financial freedom by 40? Your goal decides your strategy. Step 3. Start small and scale up. Invest a small amount first. Even $50 is enough. Keep adding to your portfolio regularly and let compound interest do its magic. Here's the deal. The stock market has made millionaires out of ordinary people, but it has also bankrupted thousands. Mutual funds have built wealth steadily for decades. They won't make you rich overnight. Now you know the truth. The question is, what are you going to do with it? You can leave this video, go back to your 9 to 5, and let your money rot in a savings account. Or you can take action, start researching a good mutual fund, pick one stock and track its movement daily. Set up an investment account today. Because the people who make the right financial moves today, they're the ones who live the dream life tomorrow. If you found value in this, don't keep it to yourself. Like the video, subscribe, and share this with someone who needs to hear it. Because the difference between broke and wealthy is knowledge. See you at the top.